Joseph Capurso is a well-known currency strategist at the Commonwealth Bank of Australia. He's joining me now on the line to talk especially to Dukascopy TV. Joe, if we look at all the data that's come out of Australia this week, we've had GDP better than forecast, the Reserve Bank of Australia left the rate unchanged, and we've had disappointing unemployment figures. It's been quite a mixed bag, but what about the broad picture of the economy?
We think overall the Australian economy is in strong shape, despite that small rise in the unemployment rate. Consumers are growing their spending in line with income growth, but consumers are spending on overseas holidays and services rather than in the shops. So retail trade has been weak, but overall consumer spending is quite solid.
You mentioned retail spending. Other than that and unemployment, what are some of the big concerns for Australia going forward?
The main issue for Australia is managing the mining boom, particularly the inflation pressures that come with big income inflows and rising demand to produce the commodities for the Asian market.
So how much do you think the economy may potentially expand by 2012?
We think the Australian economy will grow by more than 4% in 2012. There are two main drivers here. One is a 14% projected increase in business investment, particularly by the miners and related industries. And the second driver is an 11% projected increase in exports, again, particularly by the miners.
Well, 4% seems like quite a solid figure. You also mentioned interest rates earlier, so let's talk about that. On Tuesday, the RBA seemed pretty upbeat about the outlook for Australia, but an unexpected increase in the jobless rate is once again starting to worry investors. Are the RBA still likely to hold off on cutting interest rates for the next few months or not?
We think the RBA will want to wait and see whether all the volatility and softness in the US and European economies, whether they have a big impact on Asia. The RBA is very much focused on Asia rather than what is happening in the US and Europe. If Asia were to slow down appreciably, then the RBA would be thinking about cutting interest rates. But the information that we have so far is that Asia is going quite strongly, and like Australia, they have quite high inflation. So we're quite confident the Reserve Bank will not be cutting interest rates this year.
OK, but obviously a slowdown in the global economy and particularly in Asia will start to weigh on the Aussie dollar.
Certainly. We think the global growth slowdown needs to get worse, and particularly see a slowdown in Asia to see commodity prices fall. If that were to happen, then you would see a major impact on the Aussie dollar. But while Asia remains quite resilient, so will commodity prices and so will the Aussie dollar.
So in regards to the Australian dollar, what is your outlook for the Aussie over the next few months and indeed over the next year?
We think that the Aussie dollar can track between $1 even against the US dollar and $1.07 over the next year. But if the overseas economies do slow down appreciably, then we'll see the Aussie dollar at the lower end of that range.
Thank you very much, Joe. That was great. Dukascopy TV will be interviewing more professionals to give their expertise on the financial market, so stay tuned for more.